Well, I'm going to move to the investment landscape now, not focusing on reporting season, but going overseas and whether there are opportunities returning in the Indian economy under the stewardship of PM Narendra Modi. Apparently, it is slowly returning, turning around the economy. Jack Lowenstein is Joint Chief Investment Officer at Morphic Asset Management. He joins me now. Jack Lowenstein, good to see you. Thanks for being there.
I'm looking for a pay rise.
Oh, well, exactly. Well, you know, you probably get them. I mean, you probably pay yourselves a pay rise, do you? What do you think about that Murray Goulburn thing now that you've brought it up?
Well, I think it's a bit. It is a bit odd. I joined many years ago. I joined the board of a semi-bankrupt reinsurance company called REAC, and we got paid. I think we got paid $75,000 as board directors for a very, very risky situation. And I was on that company got taken over as a company called Caledon about a year and a half ago, and we never gave ourselves a pay rise in 15 years. So what can I say?
Yeah, it's pretty unbelievable. Anyway, I do want to turn to something. I mean, you and I have been talking about India. You've been talking about investing there when Narendra Modi first won office. Then you went off the boil about it for a while. Are you now having a rethink about India?
We've had a very big rethink all year, and we've now got about 10% of the fund in India.
10% now, what you'd sold right back down, had you?
We'd gone to 0 at one point, and we're now back to 10. And it's very interesting. I guess that we've gone back to where we started from. We thought that the really good lower risk opportunities in India would be associated with infrastructure.
All right, well, before we get into those good opportunities, I mean, the wave of disillusion hit during, 2015 over some pretty massive problems facing India, like debt.
Yes, very. Look, basically the economy slowed, and the banks, particularly about 75% of the banks by balance sheet value are controlled by the government still, and they found that they had a hell of a lot of bad debts, and that was was really bad for the stock market, but also very bad for the economy because they basically couldn't lend any new money until they cleared up their books, which I think they're about 75 or 80% of the way through now. So that's a very big that's a big difference between now and, say, a year and a half ago.
Sorry, did we get the reforms that Modi had promised? And is there now an environment more conducive to business there?
I think some of the reforms are really coming through in a big way. I mean, a lot of the reforms were things that didn't require legislation, just required changing people, getting better people in, and changing the culture. And that's a slow process, as you can imagine, but it is happening. But one of the key reforms was introducing a nationwide GST, which will improve the tax base of the economy, but also it reduced a lot of the friction that the very complex tax regime they had before caused for getting things from one state to another, that kind of thing. So it's a very big reform, and it took a lot of negotiation because Modi has a big majority in the lower house, but he has no majority in the upper house. Stop me if this sounds familiar, by the way.
Yeah, no, exactly, exactly. Jack, just tell me, I mean, how do you tell what is real and what is hype in a market like India? I mean, you're not there all the time. You have to depend, I guess you obviously go there, but you don't live there full time. You have to depend on external sources for real information about what's going on.
Well, obviously, we have access to broker reports. The Indian newspapers are very good.
Yeah, but they could be full of hype.
They could be full of hype, but actually, one thing I'd say is very interesting about there's the Indian mentality. They're very happy. They're what my wife sometimes describes me as. They're kind of happy pessimists, and so they really don't believe that change has happened until it's actually happened. So, for example, when we were investing in India in early 2014, we were pretty confident the election would go well for the reformists, but the Indian market didn't actually buy into that for the last possible moment. It was quite spectacular. Until the votes have been counted. And, we're seeing a very similar situation at the moment. So if I can talk about this, one stock that we own.
Yeah, no, go into, because I want to know, I mean, you like infrastructure, which I guess is pretty dependable, right?
It's got dependable elements to it. I mean, what the largest investment we have in India is a company called Power Grid, which is like Ausgrid. It's a national grid operator. It's a truly national grid operator. It's the biggest grid operator in the world. And
wow.
But all it has to do, it builds basically huge transmission lines, and it has to guarantee capacity on those lines. It doesn't get paid for the amount of power that gets transported across the lines. So it's a very predictable business, and I think very cheap, and got great growth because India requires a lot more transmission capacity, mainly because where the power is generated, where the coal is and so on, is not where the power is needed, so they have to get it from A to B. But the sort that we're most excited about, we think is at the moment, is a company called IRB Infrastructure. And the reason we're so excited, this is the biggest road builder in India, with a special focus on some of the more affluent areas in the states of Gujarat, Maharashtra, Punjab, and around Delhi. And it has been has struggled because it has to basically fund all the roads on its own balance sheet. And they're about to float India's first infrastructure investment trust, which will make it very much like the Macquarie model, where you remember Macquarie used to float all these trusts that had all these infrastructure assets in them. And the result
so how will it work in India, and why are you excited about it?
Well, because India has a very high cost of capital. If they can, to put it in this context, the IRB is going to float off 6 of its toll roads into this trust. It's going to offer the investors who buy those roads about a 9% yield. But in doing so, it's going to unlock a significant amount of value on its own balance sheet. But our estimate is they're going to make about a 40% gain on sale from the value the roads are currently carried on their balance sheet to what they're going to get when they sell it into the trust. Now, the really good thing about that is they're going to take that money and reinvest it in new roads. And I can tell you, anybody who's been to India will tell you this story. You know, India needs more and better roads. It needs to upgrade all the roads it's got and build quite a few new ones. So there's a massive opportunity for investment. But because capital's been so short, it's been hard to do. And this innovation, which at the moment the Indians are, I think, they're fully aware of, they totally understand how it would work, but they just don't want to believe it till it actually happens. We think it's going to have a significant impact on the cost of infrastructure in India, which will help drive growth.
All right. Is there a risk to this investment trust?
Yeah, the risk with toll roads, as we've seen in many cases, is that they don't deliver the revenues expected. But
sorry, Jack, whether Indians can afford to pay the toll.
Well, I think they're only going to be putting what I'll call mature, stabilised toll roads in, where they already have where they're already generating a profitable return. So that's the key. You can't expect mums and dads effectively to invest in roads that you haven't yet built. But what you can do is sell them roads that you have built that already have a reliable income stream, and that's going to be the model that IRB is going to adopt.
Jack, it's Nadine here in studio. I'm curious, if you're now upping your interest in India, where are you taking it away from, or are you moving cash from the sidelines to India?
Well, no, we have been fully invested. We're taking it essentially, I'd say, away from most of the rest of Asia, and we're underweight both Europe and the US at the moment. So it's coming from parts of the emerging markets where we don't have much interest, and it's coming from developed markets.
All right, and Jack, sorry to interrupt, Nadine. Just that means, I mean, you had been pretty bullish about the United States. Have you gone off the boil about that?
No, we're still more bullish about the United States than we are about Europe. But we just think that at the moment there's some great opportunities in emerging markets, and so that's why we're reallocating the capital a bit.
All right, Jack, always great to talk to you and get your view. Most interesting. Thanks very much for joining us from Morphic Asset Management.
And get me that pay rise.
Yeah, like all of us. Yeah.
Me too. I think we're all in the wrong